Uber reporting earnings of $1.17 a share, topped estimates of 81 cents, marking the company's first earnings beat in 3 quarters. Revenue, $14.19 billion. That was slightly below expectations of $14.24 billion. Gross bookings totaling $58 billion. That was ahead of estimates. And delivery bookings also topping expectations, while mobility bookings came in slightly below estimates. Want to talk about all that and more. Joining us right now, the company's CEO, Dara Khosrowshahi. Dara, it's good to see you this morning. As we said, you beat on the EPS number. The revenue piece came in a little light. What's your take on what happened there? And is that something that happened there?
Yeah, the gross bookings of the company, we grew 22%. It was actually an acceleration over Q1 of 22%. Revenue grew 14%, which is lower than gross bookings, but that's actually because of an accounting change that we had in the UK. We changed how we account for revenue in the UK, so I wouldn't call that a fundamental issue in any way. And then you saw our adjusted earnings per share up 35% on a year-on-year basis. And we had free cash flow over $10 billion over the last 12 months, which is a record high for us. So the business continues to execute incredibly well, very healthy across both the mobility business and the delivery business.
Couple other things that were interesting to me. Prices have declined. You know me, I love a lower price, but I don't know if that's probably not good for the business. In places like LA and San Francisco?
Yeah, so we have actually had some wins as it relates to insurance. And one of the most significant causes of price increases in mobility in the U.S. have been insurance. There's tort reform going on. Hopefully, it's going to bring the cost of living down. And that also includes the cost of Uber. So where we have gotten some relief as it relates to insurance, we put that back into price, lowered prices for consumers in a lot of markets, for example, in California, and we've seen an acceleration in terms of bookings in those markets. So the U.S. actually continues to be really healthy. Growth in the U.S. accelerated both in mobility and delivery Q2 over Q1, and part of it is because of some of these insurance savings that we're giving back to the consumer.
What are you seeing in terms of the consumer strength itself? You know, here at this Aspen Economic Strategy Group meeting, there's just conversation after conversation just about how healthy is the economy itself. We spoke to Scott Bessent yesterday, who talked about how he thinks there's no longer a K-shaped economy. He thinks it's something he's describing as a C-shaped economy. What do you see?
We're seeing something similar in that the consumer broadly, as you can see, is strong, and that's why our overall bookings, gross bookings, actually accelerated quarter by quarter. We're not seeing any signs of trade down. We're not seeing smaller basket sizes. Consumers remain generous in their tipping, for example. Sometimes if someone is feeling pinched at the pocket, they might pull back on tipping. None of that is happening. And at the same time, we're seeing actually earners, our drivers, for example, their earnings per utilized hour are up 8% on a year-on-year basis. So the labor market for blue-collar market, to some extent, we represent the spot market for labor, and the labor market is strong in the U.S., which is reflected in our earners making more money, I think, than they have for the past couple of years, with their earnings per hour up 8% year on year, which is super, super healthy.
Okay, since you raised it, I should just go there because it's not an earnings story; it's a tipping story. What do you think? What's the average tip these days? What's a fair tip? Because I know years ago we had a conversation about how when Uber was first built, the plan was for no tipping.
Well, Andrew, you don't want to ask me. I'm the CEO of Uber, so I'll always encourage you to tip 15 to 20% on a ride or a delivery. I think it's up to the customer. I mean, the whole point of tipping is pay for the service rendered. So if you get a great ride, if you get that delivery on time, put a good tip in there because there are real people who are giving that service, and show your appreciation.
One other piece, it looks like, we keep talking about spending, how much people are going to spend in CapEx, big tech companies. You plan to spend about $10 billion, it looks like, over the coming years.
Yeah, that is investment that we're making in the autonomous vehicle ecosystem. As you know, AVs represent a very important future of mobility. We are partnering with the entire ecosystem. We've got partnerships with over 30 AV players. We're going to be in 15 markets across the world by the end of the year. So we're leaning forward and investing in AV, whether that's in partnerships like Wave or Wabi, or whether that's vehicle commitments with partnerships with Lucid and other OEMs like Rivian, to make sure that we have enough AV vehicles when this technology hits a prime time. We think it's worth the investment. Obviously, with $10 billion of free cash flow on a 12-month basis, we've got the balance sheet and, more importantly, the cash flow to fund these kinds of investments for future growth.
Hey, Dara, you've been pretty clear about your plans on this growth for a long time, so maybe your shareholder base is pretty well informed on some of these things, but I can't help but think it's the same sort of transition that a lot of these hyperscalers have made, where you had companies that were very CapEx light, software companies, that were bringing in a ton of cash and didn't have to put out much CapEx. How do you think about things as you make that transition yourself? You know, you were a very CapEx light company. You see the future being in these robo-taxis. It's a huge change in the business, though. What are the advantages? What are the disadvantages? And how do you manage that transition?
I think it is, Becky. It's absolutely a change in the business, and it's something that we are managing carefully. In the early kind of iteration of the business, there is no kind of financing model out there. You know, there's a question as to how much is an AV worth? What's a residual value of an AV? None of these things have been established. So in the early iterations of AV, we are going out, we're investing with our own balance sheet, and we're doing it through cash flow, which is pretty important as well. We're not taking on a bunch of debt for this stuff to establish the business model of AV. What we're seeing very early on is that we can drive a lot of utilization of these cars. It is well over 20 trips per vehicle per day. In some markets, it's over 30 trips per vehicle per day, which creates kind of a monetization model that then we can take to financiers. And for example, we have established a financing vehicle with Santander, who is very kind of lean forward in terms of innovation in the financial space, so that we can fund both EVs, which we do, which we're continuing to increase in our traditional business, as well as AVs as well. So early on, it's going to be on balance sheet. Over a period of time, this stuff is going to be kind of financed by industry. It's an age-old trend, and we're just very, very early in the development of this industry, which is why we're leaning in to innovate for the entire ecosystem.